In this presentation, we will record a receive payment form and the related deposit within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. Let's take a look at our objective by selecting the plus item up top. What we're going to do now is receive payment and then make a deposit. The full process then in our customer field is that there has been an invoice that has been created. People owe us money from that invoice. We are now going to use the form called receive payment. This is an input form from QuickBooks that will allow us to enter the journal entry related to the receipt of the payment, which is to reduce the accounts receivable and record the money received. We're going to put it into undeposited funds because we haven't yet gotten to the bank with it. Then we will go to the bank and deposit it. Let's take a look at that in terms of financial statements, and then we'll go through the process. We're going to go to the reports on the left. To get the story of what we're doing here, we're going to go to the balance sheet, and then we'll change the dates up top from 01/01/19, 12/31/19, and run that report. And what we're going to say here is the invoice has been created. When that happened, we increased accounts receivable and we increased sales on the profit and loss. So we have some money owed to us in the accounts receivable. We expect to receive then a check in the mail. When we get the check in the mail, the payment has been received. This accounts receivable will then go down. It's going to go down. We would think that the money would then go into the checking account. That's where it ultimately will go. But we first are going to put it into this undeposited funds because we want to make sure that we group everything together so that we deposit it into the checking account in the same format that it will be seen on the bank statement. So we're going to record that into undeposited funds with the receive payment form. Then we're going to make the deposit. The deposit is the form that's actually going to put it into the checking account. Deposit into the checking account, typically taking it out of, the normal process will be to take it out of the undeposited funds. Let's do that now. To do that, I'm going to make another form and keep this balance sheet here. We're going to make a new tab, in other words, in better words, in the correct words. So we're going to right click on this tab and we will duplicate this tab. It's going to be called a balance sheet. So I'm going to pull this other tab to the right so that we can then work on this tab and keep the balance sheet there. We will return to it later on. We're going to select the plus item up top. We're going to go to the customer side. We're going to go to the receive payment. So we select a receive payment. Here is our receive payment form. This is a data input form, although it's not something we typically think of as providing to somebody else. It's a form because QuickBooks uses it to facilitate the data input, the transaction, the accounts that will be affected from the data input. So we're imagining we're getting a payment in the mail from Anderson Guitars for an invoice that we issued them in the past. So we could select the drop down for this customer or just type in Anderson, there is, tab over. Then we're going to say that the date is going to be January 28th, 01/28/19. January 28th for our problem. The type of payment we got, we're going to say is a check. So we're going to say check. And then the reference number, we're not going to put a reference number. We could put the check number, would be nice, probably should, but not required. It's going to go into undeposited funds, not the checking account. If we were to take that check and deposit it immediately, then we could skip this step. However, if we're going to group that check and other cash receipts we've got during the day and then go to the bank depositing them in one lump sum at the end of the day, it's useful then to go through this undeposited funds. Whatever our system is, we just want to make sure that we have a system so it's consistent. This is a good system to have if we collect multiple payments in some form or other and if we have a habit of going to the bank on a regular basis and depositing them. The next item. Next, we're going to select the invoice that will be related. We can look at that invoice if we click on this link, this blue link, but then we'll have to close the receive payment form, so we won't do that. We're going to click on this item, and that's going to choose this item and record the payment. So it's going to assume then that we got paid in full for this invoice, meaning we have a check in our hand from Anderson, our customer, for $430.50. If that is indeed the case, we'll keep that the same. If it's not, if we got something other than that, something less than that, we'll put that in here. And there'll still be an amount due on this invoice. Otherwise, it will be completely paid off. Now we're going to go down below and we're going to choose this item, and we're going to say, instead of save and close, we're going to say save and new, because we got another check in the mail. It's been a good day for the checks in the mail. We got some payments. And so we open another receive payment form so we can record this other check we got for an invoice that we issued in the past. This one from Eric Music. So if we select the drop down, we see our choices. I'm going to type in Eric Music, and that's the one we want. So we'll say tab. It's going to be as of this date. That's good. The payment type, once again, a check. So we're going to have the check, and it will be going to undeposited funds. In other words, we will be decreasing accounts receivable. That's what receive payment form should most indicate to you, even though obviously we got payment. Probably that's the first thing that comes to mind, but it really means accounts receivable is going down for sure. And then we're going to go over here and record the other side, typically to be some kind of payment account, in our case, undeposited funds. Then we're going to go down and select the invoice. So we have this invoice for Eric. Is that the one we got the check for? Most likely, probably didn't give us a check randomly. So we'll select that item. The check then is going to be populated for $525, or the amount of the payment. If that is indeed the amount in the check, we're going to keep that. If it's not, we'll put some other amount that was received. If that is the amount received, then it has been paid in full. Now we're going to close this out. We're going to say save and close. We'll take a look at the balance sheet, and then we will go back in and take a look at the deposit. So we'll say save and close. We're going to scroll back up top to the balance sheet. It's already on this tab, but if the balance sheet tab is over here, we had it. And if we refresh it, I'm going to run it one more time just to make sure that everything has been updated. And then, of course, it's not in the checking account yet, even though we received checks. We haven't put it in the checking account yet. We put it down here into undeposited funds. If we select undeposited funds, then we're going to see that those two checks are now there. Notice the trend in undeposited funds. It goes up, then it goes down to 0, then it goes up, and it should go down to 0, hopefully on a nightly basis. That's what the routine should be. If we select any of these payments, these are the form, a payment type form. We'll go back to that payment type form. Remember that this really isn't a form we give to anybody typically, but it's a form for QuickBooks. It's a data input field, data input form. We're going to close that back out, scroll back up, and we're going to go back to our balance sheet. And then the other side, of course, is accounts receivable. So we've got the accounts receivable. It should be going down. It's going to go down by the payments that have been made. We see those down here in January 28th. So there's the 430, there's the 525, the other side, the payment side. This is going to be decreasing accounts receivable. These individuals no longer owe us the money, Anderson Guitars and Eric Music. If we scroll back up and go back to the report summary, now what we're going to do is we're going to take these undeposited funds amount and go to the bank. So we can imagine ourselves physically going to the bank, depositing, and we want to batch those two deposits together into the bank and record them as a deposit at the end of the day. So we're going to do that by going to the plus item up top. Let's go back to our other tab. This is our data input tab. And we'll go back up top and we hit the plus item, and we'll go to the bank deposit now. Bank deposit. Notice this one should be, it's kind of linked to the customer area. Whenever you think about deposits, hopefully the deposits are from customers. We got money from customers. But it's over here in other because we may have other things. We may have deposited money. We may have got a loan. But hopefully the deposits are kind of part of and linked to, you can think of as the customer or accounts receivable sales cycle. So if we select that, then we're going to say it's going to go into the checking account, the 28th. We're going to keep that as the day. Now we're kind of in our normal system. We collect payments, and then we go to the bank at the end of the day. We deposit them. We're then going to select these two items. We're going to check them off, selecting those items, adding up to $955. If we scroll down, if we had any other items that we're going to deposit down here, we can add them as well, just manually add them in, not having them be linked, in other words, to the received payments. These items are linked. If we were to select the hyperlink, we would go to the receive payment form. And that's it for the deposit. So we're going to scroll down the 955 and say save and close and check out that balance sheet another time. So we're going to say save and close. It's been deposited. That looks good. We're going to go back to the balance sheet, which is on the tab to the left, back to our balance sheet. And we'll go up top. I won't refresh it this time, see if it saved it for us without refreshing. We're going to go to the checking account up top. It should be increase in the checking account for that 955. There it is. There's that deposit. We don't need to run the report again. The report has been run. and we'll check out the 955, and that'll take us to the deposit form. Remember, once again, this is kind of like a form for QuickBooks. QuickBooks uses it as the data input form. It means there's going to be a journal entry related to it. It means that the checking account will go up. That's the case for a deposit. It's going to make the checking account go up. The other side will be assigned to whatever account we determine. If it's going to be driven by the sales receipt or the receive payment forms, as is the case here, the other side will bring undeposited funds down. And that's what we typically hope the case is when we make the deposit. It's going to be we make an invoice and we increase accounts receivable and sales. We get paid on the invoice, and then we decrease accounts receivable with the receive payment form. We decrease accounts receivable, put it into undeposited funds. Then we make the deposit, increasing the checking account and decreasing undeposited funds. That, or we make a sales receipt at the same point in time, increasing sales, increasing undeposited funds. Then we make the deposit based on the sales receipt, which would populate here, and that would increase the deposit, increase the amount in the checking account, decrease once again undeposited funds. If we had any other format of the deposit, we can then just choose the account down here if it was us that put the deposit in, or we didn't go through the system and instead are just directly recording the deposit into the deposit form. Then we can go down here and choose the proper accounts to do so. We're going to say save and close, then go back to our balance sheet. Going up top, we're going to go back to the report summary, and we'll scroll down. The other side was in undeposited funds, which is now 0, which of course we hope is the case at the end of each day. At the end of each day, we expect it to go up, and then it goes back down to 0. For more accounting information and accounting courses, visit our website at accountinginstruction.info.